start. As I said before, good afternoon, everyone, and thank you so much for making time so that you can join us to today's business plan writing webinar. I'll be one of your moderators, Faith Kalwakaniki. First and foremost, I'd like to thank Mr. Emmanuel Mwale. Thank you so much for giving us this opportunity to discuss this interesting topic with you. Thank you so much. Let's remember to keep our mics muted and post in the comment section whatever questions or comments would have. And then later on, Josephine Mwangala will take on the questions we have during the question and answer session, which will be happening every 25 minutes or so. But before we start, Natasha Mwelwa will formally introduce our speaker and our guest, Mr. Mwale, and then she will also share something about the association, which is Unzabeka. Natasha Mwelwa, over to you.
Good afternoon, everyone. My name is Natasha Mwelwa. I am the Unzabeka Research Committee Editor. And I'll just briefly give a note about what Unzabeka is all about. So Unzabeka is a student-led association that aims to bridge the gap between theory and practice in economics and business, not only through webinars such as the one we're having right now, but also by providing a platform for publishing students' written articles and for facilitating trainings to its committee members. So there are 5 committees under Unzabeka, namely the Research Committee, the Projects Committee, the Media and Arts, Finance, Internships, and Debate. So to be able to enjoy such privileges like the one we're having right now, please remember to register with Unzabeka, and the one-time membership fee for the year is 45 kwacha. So all the other payment information details will be left in the chat. So on to our guest today. We're privileged to have Mr. Emmanuel Mwale. And Mr. Mwale is the founder and managing director of Emmanuel Mwale and Company. And this is a management consulting firm which provides strategic management advisory services. So the firm is determined to support ambitious local and foreign organizations achieve extraordinary business results through innovative thinking and practical management solutions to business challenges. We're very pleased to have you with us, Mr. Mwale. Over to you.
Thank you very much, Natasha, for having me. Good afternoon, everyone. I'll just show my face for a few minutes, and then I'll get into the program. In the meantime, Natasha, you could just blow up, you could just make my presentation ready. Good afternoon. My name is Emmanuel Mwale. I'm Managing Director, like Natasha rightly put it, at Emmanuel Mwale and Company. I'll be speaking to you today about how to write winning business plans for early stage companies. We have prepared a presentation aid to assist in the delivery of this presentation. And I'll just wait for the Unzabeka team to put it up so we can start. Natasha, have I been given rights to share? Maybe I can share it from my end.
Just give me a second to confirm.
Alan, you may kindly make Mr. Mwale host so that he may share the presentation.
Okay, great. I hope that everybody can see my screen. Natasha, could you confirm? Are you able to see my screen?
We can see your screen, thank you.
Okay, great. So we're going to cover how to write a winning business plan for an early stage company, not in any other way, but in the Emmanuel Mwale way. Just one second. Okay, so just as we begin, it's very important to understand what an early stage company is. The business plan writing process that we're looking at today is not for any type of organization, but an early stage company. So an early stage company is a company at this stage. So you see the little guy there with the light bulb. The stage at which you have the idea that you want to execute is the stage we call the early stage, commonly known as the startup stage. That is the business plan writing format that we're looking at today. Our presentation today, this is the structure. We're going to structure our business presentation today in 4 segments. Segment 1 covers the idea versus the reality. We're going to look at the black and white quadrant and the gain-pain ratio. These are basically theoretical constructs that we use to argue out the validity of the idea that we're trying to execute. Part 2, which is segment 2, we're going to cover the business thought process. We're going to use the business model canvas to make that argument. Segment 3, we're going to do the same thing with the business model canvas, which is structured in 2 parts. You've got the right side of the business model canvas and the left side of the business model canvas. We shall do the working definitions of what a business model canvas is as we move along. The last segment, which is segment 4, will cover the detailed structure of writing a winning business plan. This will argue out how you can defend the business case and execution strategy for your business plan. All right, so what is a business plan? The fundamentals around the business plan is that you need to understand that a business plan is not an academic document. You're not writing it to pass an exam. It is a real world document that guides your business. It is meant for action. So what is a business plan? A business plan is a tool that is used by business owners, business managers to guide how they'll run the business, what decisions they need to make and when they need to make those decisions. Who needs a business plan? Business owners need a business plan. Business managers need a business plan. What is the business plan for? So most business plans are used by startup businesses to raise capital. But in essence, a business plan's first priority is to guide the business in terms of how it's going to run. I hope that's clear enough and simple enough for you to pick up. Then I'll get to how to write a business plan. In the first place, before you write any business plan, you have to make certain arguments around the validity of your idea. The validity of your idea is based on, are you solving a real world problem? How do you test that? At Emmanuel Mwale Company, we use the black and white quadrant. The black and white quadrant is a tool that tests whether a business problem is an actual problem in the real world. So it has 4 little squares. There's a blatant square, there's a latent square, there's the aspirational square, there's a critical square. You want to check whether your problem is blatant and critical. Blatant meaning it's real, critical means that it's urgent. So any problem that falls within the blatant and aspirational square may not necessarily be a problem that you want to start addressing with your business plan. It may not be a business that would be necessary for you to start, because maybe you may just sink your money. Any business plan that is covering a problem that is latent and aspirational, again, it's not a business plan worth writing. It's not an idea worth executing. But a business plan that is blatant and critical, you see the black square in the top right corner there, that's a business plan, that's a business idea worth writing. So when we're covering business plans for our clients, we don't just go straight into writing. We ask them the question around the validity of their business idea. And to do that, we guide them through the black and white quadrant. Black, BLAC, stands for blatant, latent, aspirational, and critical. When we have tested whether the idea is solving a real world problem, what we have to check is whether that idea is easy to adopt. To do that, we use the gain-pain ratio. What are the pains? The pains are those things that a customer has to give in for them to adopt your idea. How painful are they? Pains can mean things like a cost. What does it cost the customer to adopt your product? The gains are the things that the customer will take out as a benefit as a result of using your product. What are those gains? The gains should always outweigh the pains. That's a product that's easy to adopt. That's a product that's worth adopting. But obviously, in all of this process, there's the middle part, which is the inertia. You will find, I was speaking to my colleagues during the day today about inertia. And you notice how Toyota Zambia or Toyota, the brand, would typically release a new brand every other year. And somehow these new vehicles do find themselves on our roads, but they're no new customers really. They're still tapping into the existing customers, existing customers who are able to afford those products, right? So how do they get to bury that inertia and get those customers to adopt? They, so for example, Toyota Zambia has introduced a trade-in product. So you can get your existing Toyota that you bought last year in 2020 and trade it in for a little fee to get the latest one. So that is how they're addressing inertia. Just one moment. Natasha?
Yes.
I'm being distracted a little bit by people I need to admit into the meeting.
Okay. Let me just ask Alan to take it up.
Okay. So a winning business plan is one that carefully argues out the target market's gains from the business idea and realistically minimizes their pain points while addressing the potential causes of adoption inertia. You may have the most brilliant idea. You may have the most brilliant idea, but that idea may struggle with adoption because it has not yet addressed the critical gain points for the customer and the critical pain points for the customer. So you will have to address inertia. So that's how idea faces the reality, and you have to argue that out in the process of writing your business plan. Okay, so we've looked at the gain-pain ratio. We've looked at the black and white quadrant. We've covered the first segment of how to write a business plan. I'll open the floor for questions, just 5 minutes, so we can proceed to the next part.
Just a quick one, Mr. Mwale. Is it possible if you can make me co-host so that I can continue to admit the people?
Okay.
All right.
Questions, please.
We have a question from Josephine. Josephine, you can go ahead with your question.
Thank you so much, Mr. Mwale. I was just kind of asking if you can go back and explain a bit on the black and white quadrant. You're a bit fast on that part and I didn't get what you were saying. Thank you.
Okay. Any business addresses a problem. Any business that does not address a problem is not a business that will last. Maybe it will start on account of the owners having capital, but it will not last because it needs to address a problem. Now, before you start writing a business plan or spend any amount of time on your new idea to execute it, you need to ask yourself whether it's a valid problem that you're solving in society. this is a theoretical approach to making your arguments, the black and white quadrant. The blatant stands for, blatant as a word in the English language means that this is a real thing. It's right there, right in your face. This problem is real. COVID-19 is a real problem. Latent is something that is not real. You're making it up, but it could be a real problem if you make the argument right. Aspirational is something that it could be blatant. It's a real problem, but it's not an urgent issue. Critical is an urgent issue. COVID-19 has presented a blatant and critical problem, for example, in terms of how we interact. Platforms like this one we're using now for the webinar solve a blatant and critical problem in society. So for any business idea that you have, you want to make the arguments around whether this is a real problem that we're solving by using this, this approach, questioning the criticality and the realness of the problem that we're solving. Does that address your question, Jocelyn?
Yes, it has. Thank you so much.
Okay, great. Any other questions? I must mention that this is the most critical part in writing a business plan, making the arguments, the thinking behind why are we going into this business? Why are we writing this business plan? What problem must this business plan address? This is the most critical part because you need to address the realness and soundness of the solution that you have and the problem in society. So the black and white quadrant and the gain pain ratio are two important tools for you to address and come up with the right thinking around your business plan. Natasha, no additional questions?
No, there's no more questions. You can proceed.
Cedric, I've seen a hand up from Cedric.
Hello, am I audible?
Yes, please.
Yes, not so much a question on the business plan, but on the idea of addressing a problem. So there are times where a person might have a product that's just a product, and how do you determine whether that product needs a business built around it, or whether you can just use that product to partner with another already established business and sell that product in that way? So do you use the same formula, or how do you identify if your product really can have a business built around it?
Okay, is your question that is the black and white quadrant only relating to business to consumer type of businesses or business to businesses type of businesses? Is your question around that?
Yes, around that.
Okay, so this works for everything. So your market, a market can be anything. It can be a business to business market. It can be a business to consumer market. So the black and white quadrant, if you test it, for example, if you are a tech company today and you are creating an application for, let's take mobile money, for example, it completely takes away the need for me to withdraw cash and pay you in cash. It's a business to business service. For me, that's creating the application. But it's a business to consumer service for the vendor in a mobile money booth to the end user.
All right, thank you.
Thank you, Cedric. Did I answer your question?
Yes, it did.
Okay, any other question before we move on to the next segment? Natasha, are there any hands raised in the?
I can't see any more hands raised, and there are no questions in the chat section, so I think we can proceed.
Okay, so we have covered the idea versus the reality. We have tested the black and white quadrant, and we've tested the gain-pain ratio and their importance. We'll move on to the thought process behind the business plan. So the thought process, at this point, we're going to use the business model canvas. So we're saying that a winning business plan details how the business will operate. The business model helps to clarify that operational framework, how the business creates value, how the business delivers that value, and how it generates value back in form of revenue. So that's the business model canvas. It has 9 building blocks around it. You can see them there. On the right side, you have customer relationships, customer segments, channels, and revenue streams. On the left side, you have got key resources, key activities, key partners, and cost structure. In the middle, you have put the value proposition. The value proposition is really what your business is offering the market. You argue that one out first before you determine the rest of the business model canvas. So we'll look at the value proposition first. What is a value proposition? A value proposition. If you could turn off your mics, please. A value proposition is that unique offering that your product has. Like in Cedric's question, Cedric was asking about a product type of business. What value does that product bring? Could you describe it? That is the value proposition. And that should, in essence, position your business in terms of why customers will come to you, or why that makes sense for you to create a business around it. That is a value proposition. We'll start by looking at the right side of the canvas, which covers the revenue streams, the channels, the customer relationships, and the customer segments. The customer segments may be the most important thing before you start to deliver your value. You need to identify with whom does this value proposition match, whom does it align with. For example, for us at Emmanuel Mwale Company, we've identified all segments of businesses in the business life cycle: the early stage companies, the growth stage companies, the maturity stage companies, and the dying businesses as our segments, our customer segments. Channels refers to how will you deliver that value? What mechanisms are you going to use to deliver the value that you have created? Customer relationships refers to how you will manage your interactions with your customers. What mediums are you going to use to interact with your customers? Customer relationships need to be managed for any business. The customer relationships in the business model canvas addresses how you will interact with that group that you have targeted as your customer on the customer segments building block. Revenue streams covers how you will make money from delivering this value. This is a very important component of the business model canvas, especially if you are a for-profit business. What sorts of revenue streams are you creating for yourself? For example, if you are Emmanuel Mwale Company, we make money from the fees that we charge our clients for the business plans that we write, the fees that we charge our clients for the consultancy that we provide, speaking to them about how they can best manage their businesses. We make money from several other sources. So we don't have one revenue stream in our business. We have multiple of them. I think today we have about 10 revenue streams from our management consulting firm. So that's the right side of the canvas. On the left side of the canvas, for your business to function, you need to identify what key resources do you need for that business to operate. This addresses people, what kind of skill sets, what kind of technical skills are relevant to your business for it to function. You have got key activities. What are those activities that your business needs to perform on a daily basis for it to deliver the value that you've created? You don't operate in isolation. No man is an island, and so are businesses. You need to have key partners. Who are your key partners in delivering that value? We have a service called Business Brokerage, that we'll be introducing very soon. We will be helping businesses, we'll be helping entrepreneurs buy and sell their businesses. A key partner there is the Securities and Exchange Commission. because they need to sort of regulate the space that we're in. It's people's capital, trading hands. And so a key partner would be the Securities and Exchange Commission for us. Now, in all of that, in operating all of that framework, you need to know what your cost structure is. What are those things that cost you money to deliver value? So your cost structure may make up, maybe the makeup of, maybe made up of your rentals, your overheads, maybe made up your costs for people, maybe made up of your equipment that you need to purchase. This is in finance broken down into CapEx and OpEx. We may speak about that on another day, but that would be your cost structure. It basically speaks to what are those costs that you have to incur for you to deliver the value proposition that you've created. So those would be the right side and the left side of the business model canvas. Now, before you get to writing the business plan, you need to understand that operational framework, the full set of the customer relationships, the customer segments, the channels, the revenue streams, the value proposition, the key activities, key resources, key partners, and cost structure, how all of those things come together. That's the right side and the left side of the business model canvas, how they come together to make money for you before you get to detail all of that into a business plan. So that'll be very, very important for you to start with. So the first part that we've discussed has covered, the thinking really around how your business creates value. Is the problem that I'm solving a real world problem? So that's before we start looking at the business plan. I think I'll open up the floor again for questions, and then we'll look at the detailed structure of a business plan. Are there any questions on the business model canvas?
We have a question from Cedric. You can go ahead.
Yes, hello. Am I audible?
Yes, you are.
Hello. Okay. All right, thank you. Yes, he mentioned something about business brokerage, which is going to help businesses buy and sell into other businesses, or even if it's their own business. I have a question. Can you start and create a business plan in that way? Like you have no business at all, you start by buying into another business, and your business plan is totally based on buying other businesses and sort of creating a new business from all those acquisitions. And does that fall under mergers and acquisitions as well? So those are two questions.
Cedric, could you just repeat that for me?
Okay, so I'm saying when you create a business plan, can you start with buying into other already established businesses, or even, let's say, parts of a business, say the distribution of one business, the production of one business, and creating a business plan that takes all of them to create one new business? Can that be a way in which you create your plan? Or do you have to have individual plans for each individual as part of a business you buy?
Good questions. So there are businesses, they're structured as investment holding companies. They're into, or private equity firms. They're involved in the purchasing of interest in other businesses or outrightly purchasing other businesses. So a private equity firm in itself could be, you could write a business plan for a private equity firm. For example, you've got the likes of Kukula Capital in this country. Those are, like the cream of private equity firms around the country. Their responsibility or their mandate as a business is to purchase interest specifically in other businesses. They do not have themselves a business that they operate as Kukula Capital, but they get interest in other businesses. So you could write a business plan around a private equity firm.
Okay. So what would be the value proposition for a business like that, seeing as all these different businesses each have different value propositions? So that
has to be argued out. The businesses that private equity firms generally invest into are businesses that have got a strong proposition, strong track record, and huge potential for growth, but need additional capital for them to achieve that growth. So the value proposition there would be unlocking liquidity and strategic support to achieve the additional potential that's there in the market.
Okay, thank you.
I'm just being told by my aide here that I'm moving a little bit too fast. I think we're at a located time because we generally thought that this would be an open discussion where we guide and we open up the floor for questions. I don't want to run through very quickly through this without getting people to understand the thought process around writing a winning business plan. So maybe we could take a step back a little bit and look at those areas that we've run through too quickly.
We have another question in the chat from Faith. It says,
Yes,
in the cost structure, is it necessary to adjust for inflation, especially if the prices are continually changing like our case?
The straightforward answer is yes. That would be very prudent for you to do. Hello?
Hello?
Yes, the answer there is yes.
Okay, so that's clear.
Yes, so that will be captured in your financial statements. Your inflation will be captured in your financial statements. It's part of the components that we'll look at in the detailed structure of a business plan. So you may not be able to directly capture it on the cost structure, but you will record it as a liability in one of your financial statements.
Okay, thank you. So we have another question from Cedric. Cedric, you can go ahead.
Oh, okay. I think my question is actually similar to the one that Nelly is asking. In identifying key partners, when you just have a business plan or you're just starting out, how do you get people on board? How do you get other partners to believe in the vision of your business and to actually come on board? Using just the business plan, or do you have a separate strategy for it? My question is in those lines. How do you get them on board?
Okay, while faith, I'm a man of faith as well. You know, faith is important in life, but business is a game of numbers. If the partner sees the value in getting on board with you, then it shouldn't be a tricky thing to get a partner on board. What example can I use? If a bank sees the sense in partnering with you to provide you with additional liquidity in the process of running your business, then there shouldn't be any argument around how you get them on board. It's pretty straightforward. Unless you are not offering any real value and your partners are not seeing any real value in partnering with you. But in many cases, partnerships make sense. They happen because they make sense. It makes sense for you and I to partner on something because you have a skill set or you have something that I don't, and I cannot execute or achieve something without you. There's a market segment that I want to capture and you are strong in that area, but only I have the technical skills to help you capture it. And it makes sense that you and I partner. So you won't have to try to convince me to partner with you. It'll be a partnership that just makes sense because business is practical. You add value to me, I add value to you, we partner in that sense. Does that answer your question, Cedric?
Yes, it answers my question. Just a follow-up question though. There's a lot of fear among, especially people who just start up with businesses, that someone can steal your idea. Like this person who has more resources than you, a bigger network than you, can start the idea. Now, bringing this to the part of getting key partners, how do you protect your business plan or your business idea? For example, you have a business and you want to get this partner on board, say bank X, and then you take this business idea to them and then they reject it. They reject partnering with you. And then a few weeks down the line, you see the same exact idea that you brought to them being executed by them. How do you protect yourself like that? Are there any legal steps or what's this, legal documents you can actually back up your business plan with to protect it from being stolen?
Yes, so on any good day, any business conversation, a formal business conversation will involve a non-disclosure agreement where innovations are being discussed. So you need to have in place a non-disclosure agreement beforehand. That should be executed before you begin your discussions. So a non-disclosure agreement, or an even more advanced one, a non-disclosure and non-circumvention agreement. So you could take those precautions before you begin. But I think we're digressing a little bit from business plan writing.
Okay. You've answered my question, but yeah. So sorry for getting off topic. Just got me curious on that.
Okay, I'm going to go back a little bit to the black and white quadrant, just to open up the floor for additional questions, because maybe we moved a little too quickly through this. I'll repeat myself that the black and white quadrant is used to address the question as to whether the business problem that you're solving is real in the real world. What is a real problem? A real problem is one that's blatant and critical. It is real, like COVID-19. It is critical. It needs to be addressed right now. That is a typical business idea that would warrant a winning business plan. Natasha, could you keep the floor open for questions?
Sure. There's a question in the chat that was similar to Cedric's question. This question was from Nelly. She says, identifying key partners is one thing, but getting them on board is another. How can a small startup successfully get key partners?
Could we put it into perspective? Do you have a practical idea? Is there somewhere you're struggling with identifying and bringing key partners on board? Maybe we could use a...
If you can speak, maybe that would be better.
Okay, so some people start small businesses where they lend out money, offer collateral-based loans within school among students. So they might think of partnering with others, but then there's always a challenge in how good are you at actually convincing people to agree to partner with you. So what's your advice? How can someone successfully get good partners to work with you?
Like I had put it earlier, partnerships are practical decisions. To choose to partner with somebody would not be based on how you feel about partnering with that person. That would be secondary. The primary thing would be, does this partnership enable me to do more than I am already doing on my own? So if you're struggling with bringing partners on board, then the question would be, are you adding value to that potential partner? Is your proposition actually valuable to that potential partner? That is the only case and the only time at which the partnership will not work. At the point which you do not have any value to add, but you need someone to come on board with you to enable you, as opposed to you also doing the same thing for them. For example, I know many partnerships are around accessing capital. So you want to partner with somebody because they have capital and you don't. The question there would be, is this capital coming to you and is it going to be put to the best use in terms of, if I give you the capital, do I double my return on that capital? Does it give me value to partner with you? If it doesn't, then obviously the partnership, may not go anywhere, may not even start. So if you're having challenges around bringing partners on board, then the real question is, perhaps, are you bringing any value to this potential new partner? If you're struggling, then it means that you're not. So you need to go back and check your value proposition for that partner.
All right, thank you.
I can take another question.
We have another question from Jemima, which says, what if I intend on doing business alone? Should I still make something as formal as a business plan?
Okay, that's a good question. So that one would be around, what is a business plan for? Who needs a business plan? What is a business plan for? So a business plan is not necessarily always for external parties. A business plan is a guide. It's there to guide you in terms of how you're going to run your business. When are you going to do certain things? What goals must you attain by a certain time? That's why you need a business plan. That's the primary thing. That's the primary reason why you need a business plan. Anything else like raising capital is after. It has already guided you on how you're going to do what you need to do for the business to function. So yes, if you're going to be a sole proprietor in a business, you need a business plan for the business to understand how it's going to operate, to strategize around how you're going to achieve your goals. It's very, very important. You too need a business plan. Jemima. Natasha?
I think that's all the questions that we've had. That was clear to Jemima.
Okay. We've covered very important things within an hour. I'm a bit concerned.
We still have about an hour to go.
Yes, I'm a bit concerned that the critical parts of the business plan writing process, which is defining the soundness of the problem and whether the adoption would be easy or not, have been run through quite quickly. And I'm afraid that the audience, if they've not captured the importance of those two segments, may go straight into writing a business plan without a firm grip on why they're writing the business plan and whether or not the business idea itself addresses a real world problem. So the writing of the business plan would be the easiest thing. The arguments prior to writing the business plan are the most important.
I think we're willing to extend so that we can get clarity from this session.
Okay, our session closes at 17:50. I can take additional questions before I go on to the detailed structure of a winning business plan.
I don't see
I have a
any
question.
questions. Okay, Fred, you can go ahead.
Yeah, okay, so from an investor's point of view, why does an investor need my plan? Because I can tell him everything, I can explain everything to him. Why does he need it? Was my question clear?
Why do you need a documented business plan?
From an investor's point of view.
Mm-hmm.
Not as a business owner, like from an investor point of view, why do you think that document is important?
Okay, sorry,
From
your name?
somebody who's willing to help my business.
I didn't capture your name. Fred.
Fred.
Hi, Fred. Is it possible for you to argue out your financials audibly on recorded voice?
I should do what?
Are you able to record your voice and send me the financial statements of your business?
No, I don't have a business yet.
Okay, so the idea behind a written business plan is that your potential investor needs to study the document to appreciate the thinking behind your business idea or your business before they can make an investment decision. It's really giving your investor an opportunity to understand what you're trying to achieve. unless you can record an audio version of your business plan, in which case you have to write it before you do it. You might as well share the document.
No, okay.
Yeah.
Thank you.
Does anybody else have a question before we proceed? I think Mr. Mwale, you can continue. Hello, Mr. Mwale, are you still with us?
Hello, can you hear me?
Yes, we can hear you now.
Okay. So I say that we'll go straight into the detailed structure of the winning business plan. We have done the arguments around the soundness of your business idea. We've tested whether it solves a real world problem. We've checked that its adoption will be easy, given that the gains that you're providing will be more than the pains. We've addressed the middle point, which is inertia. Inertia is simply the reasons why a customer would hesitate to purchase. So we've addressed all of that. Now we understand the thinking and we're clear about what business we're going into, so we can go into writing the business plan. So the thinking precedes the writing. It must always precede the writing. Microphones, please. So the business plan has got a few parts. The first covers the business in terms of its legal and operational structure. May we kindly mute our mics? The first part is the business. It covers the legal and formal structure of how the business will be operated and how it's legally structured. So we look at the business details, the registration details, if it's registered, the business premises, if it has a physical location, or if it's online, the organization chart, how you structured, how you organize, the management and ownership framework, the key personnel involved in running that business, the products and services. These are basically listings of the services that you'll be providing, the description of the innovation. What is the new thing about your business that is worth investing into? That's your time and additional capital from outside. Do you have any insurance around what you do? Insurance is a very important thing for businesses, and we may overlook this, but it's very, very critical. It saves you the risk of losing the capital you've already invested. We look at risk management. These are governance issues. How do you manage risk? Small businesses today, early stage businesses today struggle with risk management. You may not understand the criticality. Risk management may involve things like what kind of business investments are we limited to? Financial institutions, as an example, may limit themselves to what is the threshold of the loans that they're able to provide? What is the limit for that? They do not deliberately go above certain limits to address the risk factor of them losing that money. So any business in any form needs to address the risk management framework. legal considerations, operations, and a sustainability plan. How sustainable is our operational framework for this business? These are some of the key parts in the structuring of a business plan that cover the business. They're really addressing the operational and legal framework around how the business will operate and the governance areas. These are very, very important. The next part. The next part, after you've addressed your internal issues in the business, the market. You need to do your market research. We argued out earlier in the black and white quadrant on the importance of understanding whether your business idea addresses a real world problem, whether it's a critical real world problem. So because we have understood that it is, then now we can do our market research to get the actual facts on the ground on the size of our market. What are our potential customers thinking? We look at the environment and the industry analysis. We look at the clients and customers. We look at the SWOT analysis. What are our strengths and weaknesses? What are the opportunities and threats out there? We need to do that analysis. Who are our competitors? What is our strategy for advertising and sales? Once we cover the market, we look at the future. What is our vision statement? What is our mission statement? These two are very, very important, not just for putting on your business card or putting in your business profile when you're sharing with your potential customers, but they're very, very important for yourselves as an organization. Everybody in an organization needs to be aligned to the vision statement and the mission statement of the organization. Why do people walk up to the office every day? Why do they stay in the office? What is this organization aiming at achieving? The best organizations with the best performing teams have their teams aligned to the same vision and mission. So defining your vision and mission statements clearly and having everybody aligned to that vision and mission statement are very, very important things. When you do that, you look at your SMART goals. Your SMART is an acronym. It's a very popular acronym in management. It stands for specific, measurable, attainable within a realistic time frame. You set SMART goals for your business. Your goals cannot be indefinite. They need to be within a specific time. You need to achieve this thing by this quarter. You need to achieve this thing within 3 months. You need to have SMART goals and objectives clearly defined in your business plan. You need to have an action plan. What are we doing next? Like I said earlier, business plan is not an academic document. It is meant to support action. So before I cover the last two parts, are there any questions on the structure on the business and on the market and the future? I'll start with the business.
Cedric has a question.
Cedric, please proceed.
Yes. My question is just on insurance. You said it's very important to insure your business against loss. I just wanted to know, in Zambia, we usually hear about insurance from, for lack of a better term, Western companies, like a company insures itself with another insurance firm. But in Zambia, is it possible for small businesses, say, I just start a town business selling stockings or selling chickens, I can also insure my business? Is there something like that in Zambia?
Yes, there is. You can insure that. A few years ago, there was an organization called Focus Group. We had a partnership with Focus Group it was a product for NAMATAs. This is a National Association of Market Traders. The insurance products were meant to support market traders for their goods. So insurance companies do have these innovative products to support small businesses that are limited in capital, insure their goods and insure their businesses. The reason for insurance is to avert the need to have to inject that capital again. So if you're insured, then you can simply claim your package when you suffer a loss. Cedric, does that answer your question?
Yes, yes, it does. Yes, it does.
Okay, the focus is closed now though. So you can check any other insurance organization. They should have insurance products that would be fit for you. If they don't, what they're doing now is that they are designing products depending on your need, but they should be able to cover you.
Okay, okay. Thank you. Just a follow-up question. The part of sustainability, how many years is your business plan supposed to cover? And we learned that you cannot have a business plan that's going to cover too many years because the future is unpredictable and you can't guarantee that to the people that you're trying to get involved in the business. However, you must have some form of future and vision for the business with clear goals and set milestones. So how many years is the best number of years to structure a business plan to cover?
Okay, so most businesses would cover anything between 3 to 5 years, before the world became a little too fast. Today, the world economy is a little bit too fast paced. So a typical business plan, strategic term would be 2 years. You want to plan for the next 2 years maximum, because the markets are now a lot more volatile. The innovative space around the world is changing much, much more rapidly. So you want to plan for a period that's manageable. 2 years is the maximum strategic period of time that you want to plan for your business. Cedric?
Oh, thank you. Thank you.
Josephine, do we have any questions in the chat?
I do not see any questions in the chat. I think we can proceed.
Personally, I've got a question.
Yes, please.
So you've already outlined that the business has to have a plan or a structure or a guide. So at what point do you evaluate its success? Is it under the sustainability plan or is it under the action plan?
Businesses get to review their business plans quarterly to check whether we're making progress under the current structures. So quarterly is a great time. Most businesses check every after a given quarter to see whether we have made progress with the current structures or not, and they make adjustments based on those findings. Whether or not you check through the action plan is guiding those critical things that we need to do now. So it has nothing to do with the structure. The sustainability plan has everything to do with remaining open as a business. Remaining open involves, how will we continue to attract capital for our business? How will we continue to retain people in our business? Are the things that we're doing today going to be relevant tomorrow? That's what the sustainability plan covers. I hope I'm answering your question.
Yes, it's clear. Thank you. And just for clarity, maybe you could also clarify the difference between the vision statement and the mission statement.
Okay. The vision is where we want to be, the ultimate goal for this business. So a solar business would ultimately want to see everybody that has been marginalized in terms of electricity to have that alternative energy resource as their primary one by a given century. That's an ultimate goal for a business. A mission statement is what we're waking up to do every day in pursuit of our vision.
Okay, thank you so much for that. And one more question from Cedric. Which one comes first, the vision statement or the mission statement?
The vision statement comes first. The mission statement is an enabler for attainment of the vision statement.
I think that's clear.
So
Does
we want to.
anybody else have a question? Okay, we can proceed.
Okay. So the last part in the structure of the business plan are these three parts. So you've got the finances, which cover the key objectives and financial review, your financial assumptions, your startup costs for that given year, your balance sheet focus, your P&L, your profit and loss statement focus, your expected cash flows, and your break-even analysis. After that, you look at the business plan summary. So the interesting thing about the business plan summary is that it comes right at the top of your business plan. So if you recall, in the structure of the business plan, we showed you that it starts with the business because you write the business plan summary last. It is accumulate. It is a culmination of everything else that you've written in the business plan in summary. So you have that written last. And then you have the supporting documentation, if any, to support the arguments that you've made in the main business plan. Questions?
Pardon me. You just mentioned that the business plan summary is written at the end, but
Yes.
it's right at the top.
Yes.
Because it contains a summary of the entire plan, and then it has the supporting arguments or documentation with it.
No, so the supporting documents are addendums. They are appendices to the document, the business plan document. They are not themselves a part of the main business plan document. They are appendices. You always have to include the appendices if you have any appendices to include. For example, if you're a registered business, your appendices, the supporting documents would be your registration certificates, your patents and companies registration agency certificate, your ZRA certificates. If you're a sole proprietor like Jemima, you have your registration certificate and you've got your TPIN. So sole proprietorships use the individual's TPIN if it's a sole proprietorship. So that would be a supporting document attached to the business plan. I saw a hand raised by Kawungo.
So I wanted to find out concerning like the balance sheet focus and profit and loss focus. Am I to understand that these are all projections, meaning you are assuming if someone invests this much, this is what this will look like? Is that it?
Yes, so these are focused not only based on investment, but based on the projected growth of the business. So the balance sheet shows your total assets and your total liabilities. Over the next period, what would that look like? Preferably, you should have more assets on that balance sheet.
Okay, so maybe my main focus is, are those basically estimations, or are you now putting into, are you giving information as at that point in time, like this is what we have in our business right now, or are we focused in what we're going to have in the future?
Okay, so the reason why today's discussion, we're primarily looking at an early stage company. So this is a company at zero. So your balance sheet is zero today, so you have nothing to show. What we're doing is focusing what it would be over the period of time that we've projected for our business plan.
Okay. So now, given such that scenario, is there any event where you're going to have any loss, since you're just estimating? And I'm assuming if you are projecting, the idea is we are going to have some profits in the future. Like, how do you get accurate, I don't assume you'd get accurate numbers, but isn't it going to be obvious that you're going to assume profits in such a case?
So the reason why we're calling this a winning business plan writing process is because we are as realistic as possible and as practical as possible. So yes, in many cases, anybody is going to write a business plan that wants to sort of position them as being very profitable. But if you engage us, for example, we're able to help you make the prudent arguments around your financial statements without necessarily bloating up your potential profits and ignoring any losses that you may incur.
Okay. One more question, sorry. So
Yes, please.
I'm going to I'll give myself as an example. So if you're thinking of an idea that hasn't yet been tested in a scenario in the Zambian setup, like you've seen it happen and it being used in other countries, the Western world, for example, and you want to try it out here in Zambia, how exactly would you go about forecasting, given that that you would probably obviously have different variables in a country like this one? So if you're coming up with estimations and you're trying to focus, how best can you do that?
So have you just joined us?
I joined you when you were, I think, on the 60th page.
Okay, understood. So I'll just take you back to where we began. So we began at looking at the black and white quadrant.
Okay.
So the black and white quadrant and the gain pain ratio are primarily tools that we use to make arguments around whether the idea fits the market, whether the idea is a real idea and solves a real world problem. So if you are trying to buy a franchise, for example, or just, like you rightly put it, borrow from another part of the world, you want to use the black and white quadrant to test whether this is a blatant and critical problem in this specific market. So you're making those arguments before you begin writing the business plan. If it is a real world problem here, then you want to check whether the gain that the market will receive from that idea being implemented here are more than the pains that they will have to incur. And you have to address the inertia in the consumers purchasing into your product. So you have to make those arguments prior to going into the main business plan. So you can't write the business plan without making the arguments around the validity of the investment that you want to make.
I see. All right. Thank you.
Thank you for that question.
We have another question in the chat from Faith. It says, is there anything to look out for which can help you identify future cash flows, especially the inflows, given that there is always an element of suspense?
I need more clarity on that question. Could you be less ambiguous?
Faith, is it possible for you to speak up and clarify your question?
Hello. Yes. Hi. So my question really is, what can help you identify future cash inflows? Because as Natasha mentioned, there's always an element of suspense. What could make you so sure after testing and trying to see if maybe this source of income is workable? What are some of the things which can really help you to kind of like conclude to say this line of inflow or revenue is something which is achievable, apart from the boxes on page 4? Is there anything else, like maybe something you practically used and has worked?
So the business plan writing is case by case basis. You cannot run away from testing. You call them the boxes, the black and white quadrant. You cannot run away from testing the validity of your idea. The only reason why a certain product will attract customers is because it solves a problem. And so you can't run away from the black or white quadrant. Your future inflows, the revenue, will only be based on the problems that you're solving. So if you're not solving any problems, you're not expecting to receive any inflows. So if your marked future revenue source is not from resolving problems in society, then you don't expect people to buy into that. You don't expect that revenue source to actually work out for you. So these boxes, the black and white quadrant, cannot be avoided in terms of in your planning process.
All right, okay.
Another question?
There are no more questions in the chat. I don't see any raised hands. Does anybody else have a question? I think we can continue.
Okay, we've covered pretty much everything in summary. So what we've covered in the process of writing a winning business plan is that you need to make the arguments around the business plan that you're writing before you begin to write it. This is an early stage company that we're speaking to. We're not speaking to a business with traction. We're speaking to a company that's starting today. You need to make the arguments around the validity of the services or products that you're going to provide to society. Are these products solving a real world problem? Is this a problem? Is this blatant? Is it a real problem? Is it critical? Is it urgent? So you need to make the arguments before you even begin penning down your business plan. You need to test after you validate the realness and soundness of your problem, whether it will be easy for consumers to adopt using the gain-pain ratio. What are the gains that people are going to get from this new business that you're bringing in? What are the pains? What are those issues that they'll have to face to adopt your product? For example, if you're selling a service, the obvious pain that will sit on the pain side would be the cost. Customers have to pay for that service. But if the cost is outweighed by the benefit in that cost-benefit analysis, then consumers are likely to adopt that product. The other pains would be things like switching between two identical products. Why would a consumer go from MTN to Airtel? Does Airtel have more minutes than MTN? Consumers would ask those questions. And so you have to understand the pains and the gains before you begin to write the business plan. And you have to address the inertia. What would be the reason for an MTN consumer moving from MTN to Airtel? What would make them slow down or hesitate to make that switch? All my friends are on Airtel, so it would be easy for me to move to Airtel. That would be something that someone would tell themselves. So MTN would say we have MTN on-net minutes. So that would make the consumer that is currently an MTN stay because they can still interact with an Airtel consumer. So these companies, you notice that they, in game theory, they're at war, providing alternatives to consumers to avoid shedding off any subscribed customers. So you need to make those arguments prior to writing the business plan. But once you do, you now have the information you need to pen down a business plan. To pen down the business plan, you have to, in one picture, sort of put all of that information there using a business model canvas. Look at what your customer segments are, how you manage your customer relationships, what channels you use to interact and deliver services to your customers, the revenue streams that you're projecting from this, the value proposition that you're delivering, the key activities, the key resources that you need, the key partners that you need to develop, and the cost structure around how you're going to be delivering all of that value. Once you have this information, you can now start to write your business plan. When you're writing a business plan, you have to define a well put together structure. The one we are advising is one that covers details around the business. It covers the business details, the registration details, where you operate, your organization structure, how you're organized as a business, the management and ownership of that business, the key personnel in terms of technical skills that are required to run the business, the products and services you will be providing, description of your innovation, insurance issues, risk management. You need to keep your business afloat, so you need to avert risk. Or for example, people say that you can't avoid risk, you manage risk. You can't get rid of it. So you need to have a risk management framework. You need to take care of your legal considerations, your operations, and your sustainability plan. You have to look at the market in the process of writing a business plan. You need to do some market research. You need to look at your environmental and industry analysis. You cover your clients and customers. You cover your SWOT analysis. What are our strengths as a business? What are our weaknesses? What are the opportunities out there? And what are the threats that we're likely to face? You need to understand all of that about the market. You look at your clients, you look at your competitors, you look at your advertising and sales strategies in terms of attracting the customers you need to record the revenue that you will be projecting in the financial statements. You look at the future. I mentioned earlier that the vision and mission statements are very, very important, especially for your internal team. People need to come to work understanding what they're all working towards. This is very, very important. So your vision and mission statements need to be very clear, not just for the external people, but more importantly for the people within your organization. You need to set SMART goals for your business. These are specific, measurable, attainable, realistic goals within a specific time frame. They need to be very, very clear. You can't put indefinite targets to what you're doing. Businesses set targets. They need to be SMART. You need to come up with an action plan, what you need to do next in pursuit of your business goals. You look at your finances. What are those key objectives financially? What are the assumptions that you're making? How much money will you make by the end of the quarter? What are those startup costs that you incur? Because what this business plan framework is speaking to an early stage business. What are those startup costs? How much is it? What are those line by line items that you need to operate your business? You need to do your balance sheet focus, your profit and loss focused, your expected cash flows, and your break-even analysis. Your break-even analysis would be very, very critical. If you're raising money from somebody else, they'll want to know, okay, I've supported you in covering the startup costs. When do we break even? So the break-even analysis would give a summary as to when you break even, bring back the money, and then you're probably starting looking at making a profit after that break-even analysis, after that break-even point. The business plan summary is written last, but it's really the first thing that should show when you open the business plan. It summarizes everything that your business plan covers in a few paragraphs, maybe one or two, but it is written last. The last thing that you have to take care of is the supporting documentation. If your business has been registered, you want to include those details and those copies of original certificates to the business plan. This will validate that you are a real business and that you're ready to get to work. After that, I think we looked at question and answers, the question and answer segment. So basically, in a summary form, that would be how you write a winning business plan. You make the arguments first and write the detailed business plan after you've made the arguments. Otherwise, you'd be unclear as to how your business will function. Maybe we can take the last questions, and I can answer the last questions from participants. Then we can close. I'll hand it over to you, Natasha.
If anyone has a question, you can just raise your hand and then you can speak up.
Kawungo, please proceed.
I wanted to find out. I can see the bottom of the slide is written Emmanuel Mwale and Company. I wanted to find out, and I'm assuming you do like a lot of consultancy work or for maybe bigger companies. Do you also provide such services for startups? Like, is there do you offer that for startups? But I'm assuming like the pricing maybe my question is in that area, like something that maybe people who are starting out as students can afford.
I'll be very frank. Yes, so we're a management consulting firm. I'll be very frank on pricing. Maybe students may not afford our services, but the very reason why we are in partnership with Uzabeka is to provide pro bono support to student-led entrepreneurship programs, including the current Launch It program that's being run by Uzabeka. So our doors are open to student-led businesses, pro bono.
All right, thank you.
All right, so you can give us a call anytime. I will share the details. The details are actually available with the Unzabeka leadership team.
All right.
Cedric.
Hello, mine is not so much as a question, but an addition to say that we're going to be having a business plan writing competition very soon. So all students should be very excited and anticipate that. We'll announce that in the very near future, and we're doing that with Emmanuel Mwale & Co.
Thank you for that, Cedric. So yes, there will be an award. There's a prize at the end of the business plan writing competition for the winning business plan. The amount will be disclosed. It's really seed capital. The amount will be disclosed in the coming weeks. Kaniki?
Yes, so after I've written my business plan, I would obviously like to present it to different stakeholders. For example, the bank, if I'm trying to access a loan or something to help me set it up. But then the bank would be interested maybe in me meeting my long-term obligation, the loan on time. But then if I want to present my business plan, maybe to creditors or suppliers, they'll be more interested if I'll be able to meet my short-term obligations. So my question is, when someone is presenting the business plan to different stakeholders, should they edit the plan to fit what that person would be more interested in, or it's a one-size-fits-all?
Okay, good question. So first things first is that an early stage company does not need the bank. That would be a wrong source of capital altogether. You need more of patient capital. You're looking for seed angel type of investors as opposed to the bank. You don't need debt. Debt will cripple your business. As to whether you need to write a different plan, a different business plan for different audiences, you may need to reasonably adjust, yes, your existing business plan, depending on who you're going to be speaking to.
Okay.
Natasha, any other questions?
I can't see any more questions in the chat. Does anyone have any question? I think there's no more questions.
Okay, it has been a pleasure speaking to everyone today, discussing how to write a winning business plan. Should anybody have any questions outside of this forum, they can access the organizers, and they should be able to get in touch with us through the organizers. Natasha, Faith, I'll hand over to you. Thank you very much.
Thank you so much for that awesome presentation. Dear attendees, please be assured that we're going to share this presentation in the WhatsApp groups and also the contacts of Mr. Mwale. From me, Faith, it's thank you so much again, and I hope to see you on our next webinar.
Thank you.
Awesome. Have a good afternoon, everyone.